All right, so what happens when a really successful old school steel company suddenly decides to bet its entire future on batteries? Yeah, you heard that right. And look, this isn't some little side project. We're talking about a massive, high stakes reinvention. So let's dive in and break down exactly how they plan to pull this off. And that really is the big question here, isn't it? I mean, a steelmaker getting into giant, grid scale energy storage? It sounds a little wild, right? Like they're in the wrong business. But as you're about to see, there is a very clear and, frankly, a very ambitious logic behind this entire move. Okay, so just how serious are they about this? Well, let's talk about the money. Godawari Power and Ispat, or GPIL as we'll call them, is putting up a staggering 1,600 crores. To be clear, this is not a pilot program. This is not a test run. They are pushing all their chips to the center of the table. And here's how that massive bet is split. A big chunk, 900 crores, is actually going right back into what they do best, making their core steel business even stronger. But the other 700 crores? Well, that's the giant leap. That's for building these battery energy storage systems. So it's this really interesting two-pronged attack. Dominate their current market while simultaneously building a brand new one for the future. Now, before we dig into the details of these new projects, I want to make one thing absolutely clear. This isn't some desperate last-ditch gamble. Not at all. GPIL is making this huge move from a position of real financial strength. I mean, just take a look at their recent performance. We're talking a 24% EBITDA margin, 15% profit after tax margin. These are really healthy numbers. They're not just getting by, they're absolutely thriving. And this is the financial engine that gives them not only the confidence, but also the actual cash to go after such an ambitious plan. All right, so first up, let's look at that 900 crore investment into their home turf, steel. And the key here is that they're not just trying to make more steel. Nope, they're getting smarter about the kind of steel they make. So what they're building is a new cold rolling mill complex. You might be wondering, okay, what does that actually mean? Well, in simple terms, it lets them create much more advanced, high-value products. Think specialized coated steel for modern infrastructure, the kind of stuff that sells for a much, much better price than your basic run-of-the-mill commercial steel. So this is their whole strategy in a nutshell. It's a very deliberate climb up the value chain. They're moving away from the crowded, lower-margin market for basic steel and pushing hard into those specialized products for things like railways and big infrastructure projects, because, that's where the real money is. And look, this isn't just our interpretation. The company's management has been crystal clear about this themselves. It is a conscious, deliberate shift towards higher quality and better profitability, not just cranking out more volume. So you gotta ask, is this strategy actually working? Oh yeah, absolutely. They just recently got approved to supply steel for India's national power grid. I mean, that is a huge stamp of approval on their quality. It actually makes them the only company in the country that can produce these galvanized structures all the way from their own iron ore. That's pretty incredible. Okay, so that's part one, making their core business stronger than ever. But now for the big surprise. Let's talk about that 700 crore dive headfirst into the world of energy. This is what they call the BESS project. That stands for Battery Energy Storage System. And they are building a massive factory in Maharashtra with a capacity of 10 gigawatt hours. Now, to be clear, they're not going to be making the high-tech battery cells themselves. Instead, they'll be assembling those cells into huge battery packs and, crucially, building the giant steel containers to house them for the power grid. So the big question is, why this? And why right now? Well, management is pointing to what's becoming a pretty serious issue for India's power grid. See, as you add more and more solar power, the grid gets really unstable. You get this flood of electricity during the day and then a shortage at night. So these big batteries, they're not a nice-to-have anymore. They're becoming an absolute necessity. And the market opportunity here, wow, it's just enormous. Get this. Right now, over 98% of these critical battery containers are imported. Think about that. India is building out this massive renewable energy network, but it has almost no domestic supply chain for the storage it needs. That is a massive gap in the market, and that's exactly where GPIL plans to jump in. And their business model for this is actually pretty straightforward. They'll import the high-tech lithium-ion cells, which only have a 5% duty, and then assemble the battery packs here in India. But, and this is the really clever part, they're going to build the big steel containers for these batteries using steel from their own new factory. It's this perfect synergy. The goal is to become the first big domestic player in a market that is just about ready to explode. Okay, but let's be real for a second. A 1600 core bet is still a huge bet. You're probably wondering, how on earth are they paying for all this and how are they managing the risk? Well, they're using a pretty balanced approach, a mix of debt and their own internal cash. But here's a really crucial detail. The debt for the battery business is being held in a totally separate legal entity, and that is a very smart move. It basically builds a firewall, protecting the core steel company from the risks of this new venture. And once again, the management team is really hammering home their financial discipline. They're making it clear that they know the dangers of taking on too much debt. They're totally committed to keeping their balance sheets strong, even if the market takes a downturn. You know, what's really impressive here is how they've thought ahead. This is not a blind leap of faith. For pretty much every major risk you can think of, project approvals, changing government policies, volatile commodity prices, they've already got a clear strategy to manage it. You can tell they have really done their homework. So the strategy is clear. The funding is in place. What does the road ahead actually look like? Are we watching a steel giant evolve or the birth of a new energy pioneer? And make no mistake, this isn't some 10-year plan or a distant dream. The clock is already ticking. You'll see key pieces falling into place over the next couple of years, all building up to the main event in March 2027. That's when both the new steel mill and the game-changing BESS factory are set to launch. So when you zoom out and look at the big picture, this isn't just a random move into a new industry. No, this is a highly calculated strategy. They're leveraging what they're amazing at, industrial manufacturing and steel, to become a first mover in a brand new, high-growth sector that India absolutely has to have. And really, this last quote from the management team just says it all. It perfectly captures the mindset here. They see this window of opportunity opening up to lead India's energy transition, and they feel that if they don't act now, they'll be too late. Which leaves us with a really fascinating question to think about. By, say, 2030, how will we think of Godawari? Will they still be known as a steel giant? Will they be seen as an energy pioneer? Or could they become both, a totally new kind of integrated industrial powerhouse for the modern era? It's going to be fascinating to watch.